The following is brought to you by goldseekmint.com. Silver and gold bullion directly from the mint. goldseekmint.com.
Welcome to Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Vancouver. I'm joined by Lawrence Roulston, editor of Resource Opportunities newsletter. Welcome, Lawrence. Great to have you here.
Great to be here, Vanessa.
Lawrence, what's your sense of the overall state of the market right now?
Well, overall, the markets are in a terrible, terrible state, from the largest resource companies down to the juniors. And a lot of companies out there are having a lot of trouble raising money. But having said that, it's really divided into two markets. There's a lot of companies that are really struggling, but on the other hand, there's quite a number of companies that are doing very, very well. They've got money, they're advancing projects, the share prices are advancing, and it's never been more important for investors to differentiate among the different companies.
Right. So do you think things are looking up in the short term in some respects?
Well, things are looking up for a lot of the companies, or some of the companies, absolutely. But for the overall market, I think it might be another year or two before we get to the point where people are talking about a recovery in the market. But between now and then, there will be fortunes made by people come in now to carefully selected, high-quality companies.
Now, you've said that there's a lot of money waiting to get into the sector. Where is that going to be coming from?
Well, part of it is coming from larger companies in the mining sector. We just saw a takeover battle for Osco, and the share price bid up to a level that's beyond twice what it was trading at before the bidding started. That's a high-profile one that most people in the industry are aware of. But at the same time, in the last issue of Resource Opportunities, we published a list of 20 other recent takeovers that didn't make the headlines. All the same kind of theme. It's larger companies buying the smaller companies to get the resources, and all of them involved huge premiums to the market price.
So premiums higher than, say, the standard 30 to 40%?
Well, as we saw in the case of Osco, it started off as a 30 or 40% premium, and then it's bid up to the point where it's effectively 100% premium. Some of the others, there were no competing bids, and they'll likely be successful. But I would say between 40 and 60 or 80% typically is the premium that ends up being paid on these things.
So would you say that that's high M&A activity for our sector or average?
No, it's probably low.
Low.
It's low, but just making the point here that this kind of activity is happening, that there is money. And you asked where the money's coming from. One aspect of it is larger mining companies. But there's also a lot of other, or at least a few other investors out there, whether individuals or institutions, that know this business, that recognize that it's cyclical, and the time to come into the market is when the prices are low, as now. So there's some savvy investors that are quietly accumulating positions.
And what do you think it's going to take for the companies to really come in a strong way?
The companies are probably going to continue working away on a fairly low-key basis for some time yet. The thing that's going to drive the market is when the typical retail investor, the generalist investor, comes back into the market. And I don't think that's going to happen for a long time yet.
A long time. What's your forecast?
Oh, a year or 2 years.
Now, you've said that company CEOs are disconnected from stock performance. Can you elaborate on that?
Well, not so many years ago, in the junior resource sector, compensation packages were low on salary and big on stock options. And unfortunately, we've evolved to a compensation model that is still large on options, but is also very large on direct salary, to the point where there's a lot of people out there, and I hate to say this, and I'm not talking about everybody, but there's enough people out there that it's disconcerting, that are more interested in protecting their salary than in generating returns for the shareholders. And we see this happening a lot with these sort of desperation, capital raisings, where they do a 10-for-1 rollback and then a nickel financing, and at the end of it, they still don't have any money to advance the shareholder interests.
Right. Now, would you be of the opinion that companies should wait this out, wait for their stock prices to rebound a bit more before they finance, or do you think companies should just go out there, start financing right now, and just build value and move their projects forward?
Well, that's a complex question, and it really depends on the individual circumstances. Look, a lot of the companies, I think, should not be raising money because they'll be doing the investors a favor. But the companies that have good projects and good management teams that are capable of adding value, they're finding all the money they need. You know, so far this year, 12 of the companies that we cover in Resource Opportunities have raised collectively $184 million.
Wow.
There is money out there.
Right.
And if a company has a good project and a good management team, they've got all the money they need. So those kind of companies are not having trouble raising money.
So the capital is flowing to the most competent teams. Just for the average investor out there, how does someone gauge the caliber of management?
Well, events like this conference that we're in the middle of right now are a tremendous way of doing that. You've got the opportunity to get face-to-face with the management of a large number of companies where you can chat with them. And from my perspective, I won't invest in a company or recommend a company unless I've been face-to-face with management.
Right.
And I would encourage other people to do that as part of their due diligence, and these conferences are very important in that regard.
Come to the conference, meet management face-to-face, and...
Yeah, look, a typical investor in the mining industry is no more competent to make their own kind of decision based on the technical merits than they would be if they were looking at a high-tech deal or a medical deal or any other kind of investment. They need to rely on somebody that has some expertise in the field to provide the high-level due diligence for them. But an important element, they should know what they're investing in, because some of these companies hope to make a discovery next week, and if they do, the investors will do fine. But you've got to understand that that's what you're investing in. You're not investing in to buy gold in the ground.
Right.
For a lot of these companies.
Now, you've been a fan of investing in China for a while. What do you like about it?
Well, in fact, just to clarify that, not so much in fact, I don't think I've ever been a fan of investing in China, but I'm absolutely ecstatic about the money that China is spending in the resource sector. Okay, they are buying up 60% of the iron ore in the world. They're buying 40% plus of the copper and the lead and the zinc and the nickel, and having done that, has driven up the prices of those commodities and made a lot of money for a lot of us in this industry over the last decade. People are terrified right now. They hear about the headlines talking about the slowdown in China.
Yeah.
Well, let's be clear on that. The slowdown means only growing at 7.5% a year.
Right.
That means that next year they're going to be using 7.5% more metal than they used this year. And this year they used a lot of metal. So I'm not in the least bit concerned about the so-called slowdown in China.
Now, they have this predictive model of growth. Like you were saying, they have set a target and then they meet it. They figure out a way to meet it. Do you think the economy is stable there? Do you think the growth is stable?
Well, the government, as you say, has a certain amount of involvement in the economy, as it does in Canada or the United States or Europe, maybe more so there. But the economy there is really driven by entrepreneurs. And I think the entrepreneurial spirit in China is to a large extent even more free-flowing than it is here.
Wow.
That a lot of the billionaires in China are people that started off in our lifetimes, their lifetimes, as at the bottom of the heap, and have built these enormous fortunes. And they know how to run businesses, and they're going to keep doing that.
How does an average investor participate in investing in China or in some of these? Is it particular commodities that you're bullish on?
Well, the general maxim here is buy anything that China's buying.
Right.
And that's pretty much the full range of metals.
from base metals to precious metals?
They're the biggest consumer of gold now. They beat out India recently to become the biggest consumer of gold, silver, and the full range of base metals and industrial minerals.
Just as we close things off, what's your investment strategy for this year?
My strategy for this year is focused largely on situations that are near to cash flow.
Okay.
And a driving force there's a lot of money around available to invest in situations where it's either cash flowing or has near-term cash flow potential. So right now, that's a big part of what I'm focused on.
Great. Well, Lawrence, it was a pleasure having you with us today. Thank you so much for joining us.
My pleasure.